News about China's additional stimulus measures have dominated the financial press over the last month. It's a more comprehensive plan from the Chinese Communist Party than we've seen so far, with the promise of more stimulus to come. In today's episode, I'm delighted to be joined by John Garnaut, founder of Garnaut Global. John leads a team of researchers with backgrounds ranging from the military to academia and Wall Street that have spent their careers analysing Chinese politics and policy direction. Deciphering the real intent of policy direction is no simple task. It not only has profound impacts on the way we think about China, but also the rest of the world. John's been on this journey for some time. He spent 6 years living in Beijing as the China correspondent for the Sydney Morning Herald, and then as an advisor to the Australian government on its China policy before setting up Garnaut Global. There are few people better equipped to talk through the broader issues in China, its economic model, and change that may be underway. John, it's a pleasure to have you on the podcast.
Alison, what a pleasure for me. Thank you for having me.
Look, China's incredibly topical at the moment, but before we dissect the recent news, I want to start with that 30,000-foot view. I feel like over the last 10 years, there's been a real shift in the way investors think about China. Agendas have pivoted from a focus on growth to social issues, and it's been more restrictive. Having spent your career studying China, what are your observations?
Look, there has been a profound shift in investor sentiment to China in the last few years, but the seeds of this were sown 10, 15 years ago. And actually, that period when I was living in China, working for the Sydney Morning Herald and The Age, it was a different era back then. But we could see the seeds of what's growing now, developing in what was kind of an interregnum period between the period when the old founding fathers of the Communist Party had all passed away, but their children hadn't yet taken over. And this was like an interregnum, and there was a lot of uncertainty in China, and we really didn't know which way China was going to go, because on the one hand, you had this remarkable almost renaissance of culture, of learning, of education, of civil society being played out in the digital domain. And on the other hand, you saw the Chinese Communist Party reasserting its systems of control and not always being able to catch up with society. In the background, and this is where my interest really was this cohort of, outside China, they were known as princelings. They called themselves by a different name. They called themselves the second generation Red. In Chinese, the Hungadai. And these people, we didn't really, it wasn't really widely known then, but these guys were gearing up to take power in China, and they had a fundamentally different approach to government than interim leaders like Jiang Zemin and Hu Jintao who'd gone before them. Now, at the middle of this pact was a guy called Xi Jinping, and he's a fascinating creature, but he wasn't the only one. You might remember back then there were people like Bo Xilai, the Chongqing party secretary, who was famous for singing Red in Chongqing, and until he, I guess, flew too close to the sun. And there were others, I won't name them all, but they were defined, they were unified. Some of them had quite different views of what needed to happen in China, but they were unified in a commitment to essentially the Red dynasty that their parents had founded. They had a remarkably uniform diagnosis of China's ills. So while we outside China, and even me in China, foreigners in China, were kind of almost awe-inspired by the economic miracle that was taking place behind us, and the prosperity that people were accumulating, and this new cosmopolitan approach to the world that was taking root everywhere. These guys were concerned about injustice, inequality, corruption, immorality, but digging deeper down, they split into two camps. There were two kinds of Red Princelings. There were the Red Princelings, and these are the guys that I initially knew, children of the reformers in the 80s. And they, in their view, China's problem was that it stopped reforms and it needs to kickstart reforms again. And then there was this other group of which Xi Jinping was was a member, who thought really the opposite, that the way to solve these apparent problems in China was to double down on the Communist Party systems of control, propaganda, ideology, security. So when the dust settled over that late Hu Jintao period, it was clear that there was one group that was in power and the other wasn't. The reformers, they didn't have their hands on the levers. The conservatives, those who took a more fundamentalist, ideological view of how the party should remain in power, these were the guys who were rising to power at the time, and Xi Jinping was their compromise candidate in the middle. Now, different cohort of people, different approach to in fact, probably these people have backgrounds that are almost unrecognisable to us. They'd all grown up in the Cultural Revolution. They'd experienced remarkable hardship, tough as nails, thought that they had not only inherited power because by virtue of who their fathers were, but they'd kind of earned it. They'd earned it because they'd lived through horrific mistreatment in the Cultural Revolution. Xi Jinping didn't know if his father was alive or dead for 3 years. His mother came home beaten and bruised from Red Guards beating her up in the late 60s. His elder sister, tragically hanged herself on a shower rail during the Cultural Revolution. This was Xi Jinping's personal experience. And not only did they feel like they earned their entitlement to rule, but through the hardships they'd experienced, and this is kind of through a revolutionary lens. If you go back to the old communist revolutionaries, they'd been tempered by the storms of revolution. They'd been hardened by revolution themselves, but they felt like they had earned it because they retained a kind of ideological purity, a commitment to the ideology, to the mission that their parents had all subscribed to back in the 1930s and the 40s in the revolutionary period. So all of this was bubbling under the surface and wasn't really apparent unless you were talking to them, unless you were seeing how they were discussing world events and national events at weddings and funerals and Chinese New Year. But the moment that Xi Jinping rose to power in 2012 at the epical 18th Party Congress, it was clear that this was a different kind of leader. He made a reference in his first speech. Nobody had ever heard him speak publicly before, but he made a reference to how the translation was, in order to make steel, the hammer must be strong. That was a reference to this Stalinist literature that he'd been reading as a kid. And it was like a coded kind of almost whistle that everybody in his cohort, all of his Red Princeling peers, they understood. He was talking to them. Totally passed over my head at the time. Then just a few weeks later, the beginning of 2013, we're starting to see kind of signs, fragments of his new agenda kind of filtering through the system. He gave a speech in early January 2013, and this is really, I think, important for understanding everything that's happened since. And he began by saying, socialism with Chinese characteristics is socialism, not any other sort of ism. Socialism is back. He said, now this is almost amazing, at that time, but looking back, it explains how we got here. He said, the eventual demise of capitalism and the ultimate victory of socialism will require a long historical process to reach completion. He said, Marx was not wrong talking about the inevitable victory of socialism. But he said, we have to respect that capitalism has long-term advantages in the economic, technological and military spheres. And then he said, we must diligently prepare for a long period of cooperation and struggle between these two social systems in each of these domains. So he's presenting here a worldview of an existential clash between the two political systems, of which China, Communist Party China, was the vanguard, the representative of the socialist camp, and the United States was the representative of the capitalist world. So now, unfortunately for journalists like me at the time and analysts at the time, Xi Jinping didn't publish that speech. He gave that speech to the Central Committee, but he kept it under wraps until 6 years later, when the Trump administration was throwing things across the Pacific, and then he published that speech for the first time in Choshu magazine. But fragments of material like that was filtering out, and you look back, and that's kind of a roadmap for explaining everything that's happened since. Fast forward to a few years ago, and the Chinese political cycle works in 5 years Congress cycles. So in 2017, he had his 19th Party Congress. In the 5 years that followed, his first 5 years were really about internal struggle, purging the party, the military, the security system, the ideological system, the digital space, like a really, really full-on, internally focused period of, in his words, criticism and self-criticism. And one of his favourite texts from the Soviet era was, by purging the party, it becomes strong. The second 5 years was about restructuring the economy, but in his quite different, strategic, very political way. It was about, he developed he took an approach to capital markets, a traffic light system to capital markets, where we'll have red lights, green lights, preferred sectors and sectors that are out of bounds. It was all about harnessing capital for state-backed objectives. Part of that program was what we called at the time, and by this time, I'm out of government, I'm in the private sector, and we called the controlled detonation of the real estate sector. And that was all about channeling this huge excess investment into other realms that he thought would be more productive than real estate speculation. But the scale, the audacity of this project was off the charts. Similarly, in parallel was the time, you might remember back in around the period 2020, he was not only beginning to constrict the property sector, but he began what he called the rectification. And this rectification is a very Maoist word. The rectification of the technology sector. That was the kneecapping of the Didi float, for those who remember back a few years ago. The disappearance of Jack Ma, the founder and owner of Alibaba, and the rectification of what had been the most innovative and impressive tech companies in the world. So if we, as investment advisors, we're looking at the upstream signals, and we were trained very early on to take Xi Jinping's words very seriously. When he says he's going to do something, he generally intends to follow through. And so through this period, there were, every second day, the Wall Street Journal or Bloomberg would reporting that, they're going to reform soon, they're going to loosen up, but there was no signals. So Xi Jinping was relentless through this period in reshaping the economy. That was brutal for investors. It was hard work for the Chinese economy. And then we had COVID overlaid on that, and again, quite an ideological approach to how to handle COVID. The total zero COVID lockdowns, and then 2.5 years later, the total reversal, unannounced, of the zero COVID lockdown policies. But again, political or strategic objectives trumping the old economic objectives.
I mean, that is incredibly interesting, and you can see, I think what you've really shown there is that really clear tension between Xi Jinping's ideology, that propaganda, that ideology, that security, versus, how we think about China's economic, and you called it the economic miracle, and that's how we've always thought about China, prosperity, and so it's really interesting to hear those two elements pitched against each other. But now, if we fast forward to what's been happening more recently, it does feel like there is a shift in tone and urgency from the Chinese Communist Party when it comes to the economy. Do you think there is real change underway?
Look, I mean, that's what our investor clients are asking us every day, and this is how we see it. Like, there is no question there's a change in the messaging, and this actually started back at the end of last year. And it was the end of last year, and we're talking to Jacob and John at the time here, and engaging in really constructive conversations about the implications of this. But Xi Jinping himself talked about a different approach to the economy. In Chinese language, it was 先立后破, first establish the new economy before you break the old. Yes. He was saying, kind of course he's blaming it on others, but I kind of overreached a bit. Let's stop breaking things and kind of get on with building things again. And so we're tracking very closely how those words track through the system. But it turned out that when we're looking at the way in which his words convert into policy action, it turned out to be very easy for him, very effective for him to stop things or break things, harder for him to start things and build things.
Yes.
And so the policy transmission mechanism, has been far from clean.
Yeah.
We saw it first, and again, Jacob and John were very engaged with these conversations. We saw this kind of new impulse cascade first into equities markets and the way that equities markets were regulated in China. They fired the old guy. Essentially, his crime was to let the stock market sink too far. They hired a new guy with very, very clear KPIs. The national team was brought in to buy equities. There were restrictions on selling, short selling, etc. And that kind of worked for a while in February, March, April. But then there wasn't anything following through on the macro policy side which supported the market. And so it all collapsed under the weight of its own gravity. But this wasn't the end of this new signalling. In May, we had the Vice Premier and others talking about real estate in a more important way than they had before. The period of houses are for living, not for speculating, that slogan disappeared. And the Vice Premier was talking about real estate being a people's asset. That's a politically loaded term that can be put to positive use. But again, not a lot of follow through. In July, the mid-year Politburo meeting, which is there's two main policy setting meetings in China. That's one of them. Came and went. Quite a dramatic diagnosis of the fact that things weren't going well on the economic front. But again, not a lot of follow through. Mm-hmm. The third plenum came and went. Now, that's not really a tactical macroeconomic policy setting. That's a more long-term strategic setting. But all of the strategic objectives, the political objectives that have really constrained the economy over the last few years, there was a doubling down on all of them, and also a more explicit talk about countering the West's containment policy, like a very counter-West positioning. And so we were sitting there thinking we could see these signals that Beijing thinks the economy is too weak, but we haven't seen policy flow through until last month. Yeah. And so it wasn't until September 24th, September 25, where you had, first of all, a meeting of financial regulators, announcing big things, and then you had the Politburo meeting on September 25, and all of a sudden you had a much more constructive policy tone coming through than we'd had all year. That's important. We told our investors that at the time, this is when you sit up and take notice, that a couple of things had happened. First of all, there was unquestionably a renewed effort to support the stock market. Unquestionably a commitment to more constructive policy coming out of macro policy, coming out of the Politburo meeting, and really quite interesting to us. Again, sometimes these phrases from Xi Jinping, when they're new, we sit up and take notice. He had a new phrase in there. He said, we must uphold the three distinctions in the context of positive economic policy making. That's kind of party speak for something he said a few years ago. But essentially, we must distinguish between the mistakes, the honest mistakes that good cadres take when they're taking risks,
yes,
and dishonest mistakes. Yes. So what he was saying is, everybody's worried about being purged for getting out of bed.
Yes.
And we're trying to change that you're allowed to spend money again. You're allowed to spend the government's money again without feeling like you're going to get in trouble.
Yes.
That's important in this system. So cadres have been told to put their foot on the economic accelerator. But this is the key piece, Alison, and this is where the judgment calls are from here on in. We're not yet sure that they've got permission to take the foot off the political brake. So they've got both feet kind of pressed to the pedals there, and I don't know much about cars, but when that's going on, there's a lot of smoke coming out the back.
It's not the way I was taught to drive.
No. Sometimes it is the way I do drive, but it's not the way I was taught.
Look, and you're right, John. Look, there has been, a slew of announcements. What do you think of what we already know now? What do you think can have a meaningful impact on households and business confidence and China's domestic economy, rather than just an equity market sugar rush?
Yeah. So look, we're quite confident that there's some serious money coming down the pike, at least for some purposes. So these signals are, so the authorised leaks are suggesting that there's going to be some pretty significant bond issuances, possibly quite soon. Like, I wouldn't be surprised if some of this drops in the next week or two. And potentially, quantum's around 2 trillion yuan, which is about 300 billion US. And the way that this has been flagged is probably about half of that will be used to recapitalise local governments.
Yeah.
Now, that's actually really important because half the local governments in China are practically insolvent. They can't pay staff. Yeah. The economy is grim at a grassroots level. Developers aren't being paid, salaries aren't being paid, hospitals can't pay for pharmaceuticals, etc. So they need to be recapitalised. So that's good, and that's a sensible place to put money. There's also talk of another 1 trillion yuan in bond issuance. Now, how that's going to be spent is a little less clear, but probably involving a recapitalisation of banks or shoring up their balance sheets. And there's talk of money also being directed to more kind of consumer spending channels. That's where we're a little bit sceptical about what that might mean.
Sceptical in the sense of whether you think it will actually happen, or in terms of whether the size of it will be meaningful enough?
So this is when all of that background that I was painting, the reason we care about the past is so we can get a bit of handle on the future, and we can start to weight these probabilities. So if you look at, what's the thing that investors would most like to see? They would most like to see a return to market-oriented liberalisation, a return to a world where entrepreneurs were valued for what they could create, and profit was king, and consumers were freed and empowered to make choices. I don't see any universe in which Xi Jinping is the master of where that's going to happen. There's no sign that China's about to flick a switch back to economic liberalisation. So let's put that idea, out of, that's not, in our view, in the bounds of conceivable possibilities, only because there's nothing that Xi Jinping or his cohort have said to support that they're interested in that agenda. And the third plenum, just a few months ago, said quite the opposite. Investors would also like to see something, stimulus which is actually directly at consumers, like put money in people's bank accounts. Again, I think that's highly unlikely, or more to the point, more precisely, likely to be very, very tightly targeted to various poverty contingent criteria, and a little bit of baby bonus type handouts as well, but not enough to move the dial. So Xi Jinping himself, going back to his core beliefs, he's talked, and we've talked about this, Alison. He's skeptical of the idea of what he calls welfareism. He talks about that being as not the kind of Western phenomenon that he wants to import to China. And to be honest, he's skeptical about the whole idea of consumer choice. That's not his thing. What he does care about is the long-term resilience of the Chinese economy and the ability of the Chinese economy to do things, to produce things that makes China stronger, that allows China to shore up and defend its vulnerabilities and to project power into the world. So where his money will go is most likely at these almost risk aversion agendas So he's talked a lot about the importance of eliminating financial risk. That's why we've got high conviction that he is likely to recapitalise banks to shore up the balance sheet, that he is likely to recapitalise local governments. That's a smart place to invest if you're interested in preventing financial system risk. He's very sceptical about debt-funded binges. There's nothing in his record or anything that he's said recently which suggests that he's interested in returning to anything like the go-go years or the response to the financial crisis. So we're looking, and there's another factor here too, and that is all year the People's Bank of China, the central bank, has been talking about waiting to get more policy space when the Fed easing cycle starts. Now, and there is an economic logic to this when they've got a capped currency, that they are nervous about money leaving China and going to the United States in an environment of high rates and rising US dollar. That's a recipe for capital outflows if they drop rates too quickly in China. So that was to a degree a rational constraint on policy making. That might to some extent explain the delay until September. It was only when the Fed easing started to bite that China actually held this out of cycle Politburo meeting to get things going. But there's also, again, a slightly ideological accent to this, and that Xi Jinping sees a strong currency as being crucial, going back to that idea of systems, of the clash of political systems. He wants a strong currency to compete with the United States. He doesn't want to give the United States any leverage over his financial system. So he's going to be he's going to be doing things that are unlikely to produce new debt-funded speculative bubbles, unlikely to encourage people to invest in things that he doesn't think are going to be productive. So what we're seeing, I think, is efforts to really build a floor under the economy. We think these are real and substantial. I think they want to hit their growth targets for this year. There's talk, and I think well-founded talk, of having similar bond issuance over the next couple of years. So we will see, an ongoing commitment to hitting these minimum levels. But there is a real, the uncertainty and the risk here. So that's broadly a positive story from where we were last month. But the risk is in this conservativeness, in these, this maybe is a slightly delayed response function that Xi Jinping, taking so much power himself, is predisposed to. There is a risk that they're late to the party, they don't throw enough resources to change sentiment, and so they're forced to play catch up. So there is a risk that there's not the kind of the positive shock that investors are looking for.
And John, what in that context of you don't expect structural change, but on the other hand, there are some interesting changes that are being put in place. For example, helping to solve the problem at the local, that debt problem at the local government level, and that then freeing up capacity for local governments to start supporting their own communities. What would you like to see? So, in the framework that that this party is working in, what could we see that actually could make a difference to repair and support household and business confidence?
So look, that's a great question. So within the realms of within the ideological and political constraints of contemporary China.
Yes.
Yeah, that's right.
Correct.
Yeah. Look, I would like to see a positive outcome, a positive realistic outcome for me is more resources than people expected, pumped more efficiently to local governments. So do a better job of what they've, do a good job of, overdo it rather than underdo it, because the risk is that if they underdo it, then you don't break the cycle of confidence. And recapitalising local governments, that's a really crucial focus point. If local governments are bankrupt, then the whole economic ecosystem doesn't work.
What about on the property sector? because that is so critical to repairing household confidence, given so much wealth is tied up into your property ownership. What can they do here to really put a floor under that? Because that's what can get the consumer spending again.
Yeah. Look, there's a lot of talk about the real estate sector and there's a lot of uncertainty. We're really not seeing flow through yet into real policy. But there has to be... There's several elements here. One is allow the market to correct itself. I mean, until people can actually see a clearing of this huge overhang of property, and developers are allowed to actually write off what they've been saddled with, then it's very hard to see how the market can kind of find any momentum. But I think there's a couple of things that could be done which are not impossible. They're not my base case. But in this realm,
okay.
Is like genuine hukou reform, and this is about the ability of migrant workers to go and live in the cities. That's all been done at the second tier cities. Doing that in the first tier cities, that is actually something that would restart the urbanisation process in a significant way. Now, second, and this is probably would be more impactful, but again, it's not my base case. It's going to happen. There's huge realms, tracts of real estate in China, second, third, around the peri-urban spaces, the peripheries of the cities, which are classified as rural land, but are actually being built on like cities. And so those landowners, it's actually owned by the village party committee rather than individuals. As soon as you get inside the city border, you can see the skyscrapers. It's worth a developer investing in expensive developments. But on the urban fringes, on classified as rural land, they're basically 6-story shanty towns. If you are able to strengthen the property rights around those, around the urban peripheries, that in itself could be an enormous positive shock to the system. So even a marginal kind of change there would be significant. And finally, just capitalising developers, lending money to allow them to write off, to digest and write off their stocks of unwanted properties. So all of those things are not impossible, and the first two are probably less likely than the third. With the ingesting stock, then really it's a matter of how much money, how freely is the money flowing, and how much are private sector developers eligible to participate.
Can you explain just very briefly what the hukou reform means in the Tier 1 cities?
So hukou reform is it's almost like a passport system. It's almost like a citizenship right for Tier 1 cities. If you want to have, at the moment, migrant workers that come and work on building sites in Beijing, their kids can't go to local schools. They don't have any of the essentially citizenship rights, health, public hospital rights of local hukou owners. If you actually invited them to participate in the ordinary public amenities of the city, that would be an enormous spur for inbound migration, urban migration.
So John, to summarise all of what we've spoken about so far, structural reform unlikely to be on the cards, but certainly we are starting to, get some policies already in place that can support a cyclical recovery. And I can tell that, you certainly feel most constructive around what's happening at that local government level. And, as the party has said, there may be more policies coming through. So we certainly need to keep watching. Let's talk about Taiwan. The tension between China and Taiwan has been escalating for a while now. And the theory was that the Silicon Shield would protect Taiwan. And the Silicon Shield is Taiwan's role in the semiconductor supply chain, and its critical role would act as a key deterrent against aggression from China. How do you see China versus Taiwan playing out? And perhaps you need to speak to timeframes as well.
Yeah. Look, there's nothing that Xi Jinping would want as his historical legacy than securing Taiwan in his terms. In his terms, in his phraseology, reunifying with Taiwan. So, that's what his military build-up is primarily about. That's what his effort to get economic leverage in the world is primarily about. That's a lot of what his international statecraft is about. Easier said than done. It turns out it's quite hard to invade a neighbouring country, even one as Vladimir Putin has found out, even when there's no sort of natural moat around the country you're going for. The Taiwan Straits is, this is not an easy logistical feat to militarily take Taiwan. So the equation is really one of Xi Jinping would move on Taiwan the moment he thought he'd get away with it.
Yes.
So that's a complex question of both capability and intent, not only in China, but in Taiwan, in Japan, and above all, the United States. So the way to think about, is something funky and perhaps tragic likely to happen in Taiwan, you can be sure that Xi Jinping will be constantly ratcheting up pressure, constantly doing things which are designed to make it more difficult to deter the United States from intervening in the event of conflict. But the moment he thinks he get away with it, he would move. So the risks we're looking for, political dysfunction, paralysis in Taiwan itself.
Okay.
Political dysfunction in Washington. This is why the next few months is important. Or signs that a future US president actually would be prepared to look the other way rather than intervene.
Okay.
And in that light, and I think this is kind of material. And where does Xi Jinping? We've been talking a lot about economic policy. The front page of the People's Daily on Sunday was not about economic policy. It was about Xi Jinping's visit to the Rocket Force. The Rocket Force is the services arm of the People's Liberation Army, which houses China's ballistic missile program and its nuclear arsenal. And when he was there, he talked about the importance of being able to build a credible strategic deterrence. And the picture on the front page of the People's Daily, in case there's any sort of ambiguity about what this was, in the background there were 3 nuclear-capable Dongfang 26 missiles. And if you look at the state media and some of the choreography beforehand, there's new talk about Mao's commitment to having a nuclear deterrence. And this is all about building China's capability to deter the United States to intervene in a regional conflict like Taiwan.
Yeah. Look, John, final question. When we're thinking about China, on the one hand, we've got this autocratic rule, geopolitical tensions are fraught, and the company's economic growth profile is maturing. But on the other hand, China has this urban population of 900 billion people. That is an incredibly large single area of demand. And even though it's lagging the United States, it's the only other country that seems capable of developing native technologies around AI and digitization. So it is quite a unique opportunity. But how should we reconcile these two broader issues?
Yeah. Look, if you're talking as an investor, this is a hard opportunity to invest into, because the more successful China is at developing an indigenous AI semiconductor technology ecosystem, the more likely it's going to fall into the crosshairs in Washington. So this rectification of the tech sector that I was talking about earlier has been transformative, and not always in a positive way, to the innovation ecosystem in China. It's no longer, Alibaba and Tencent are no longer the drivers of innovation in China. Huawei is back with they've just just with a new operating system on their new handsets, with their AI generated, their AI enhanced handsets. They're trying to build a new technology ecosystem around Huawei handphones, which is intended not to compete in the United States, but to once again compete for essentially the rest of the world. So this is an opportunity that every tech company in the world is wondering whether they can and should sell into it.
Yes.
Develop technology that's compatible with it, and also mind their risks of avoiding political and regulatory risk from the United States. So, huge investments. It's a return to a more state kind of anchored investment ecosystem. Not always successful. Like the close, we do a lot of work, Alison, with the leading tech companies. So we've looked pretty hard at AI. We've looked pretty hard at Chinese semiconductors. There's not a lot to show in the large language models that are coming out of China that can compete with those in the US at all. Same in the cutting edge semiconductor field. They've thrown enormous amounts of money at the problem, trying to compete with TSMC and other leaders of the semiconductor field in the outside the Western world, and they're not having a lot of success. But where China does have success is when you're a couple of rungs back from the technology frontier. Their ability to produce at scale, their ability to apply established technology to new uses is unrivaled. So that's where they're dominating. That's where the money's still flowing more than ever in China. And really the investment opportunity is limited by their own success, because this export flood that is coming out of China of increasingly high-end technology and materials is causing an antibody response in the Western world. The US is essentially closed for business for Chinese high-tech exports. Europe is lifting the drawbridge. So this is the great strategic game that's being played out at the moment. The battle for really the rest of the world in these technology supply chains.
I think that's a really interesting comment that you touched on there. It's not competing for the US, rather it's competing for the rest of the world. And I think that is a really good framework to think about, because the rest of the world is still quite large.
It's a big place. The rest of the world is a big place.
It's a big place. Yes, and not to mention their own internal their own internal demand. They have large demand internally, and then it is competing, as you said, it's not the West, it's competing for the rest of the world. And look, I think, just to wrap this up, the outlook, as we've touched on today, John, look, the outlook for China does look very different compared to a month ago. And despite this recent surge we've seen in Chinese equities, they're still priced at only 11 times 2024 earnings. So the market is still pricing in uncertainty around whether the CCP will do enough on the policy front to support that broader economic growth. And I think what that tells us is any additional announcements that we do see around, whether that be around property or some direct stimulus to the household, can see this rally in Chinese equities extend. John, it's been a pleasure having you on the podcast, and you've really given us some scenarios where we can see the Chinese economy reignite, as well as really walking us through the risks that still lay ahead. China's definitely not out of the woods. So thank you for your time today.
What a pleasure, Alison. Thank you for having me.
For further information on Antipodes, head to our website, antipodes.com, and you can also follow us on LinkedIn and Twitter.
The content in this podcast is general information only. It is not advice of any kind and doesn't take into account your personal financial situation, objectives, or needs. You should seek professional advice before making any financial decisions. Stock commentary is illustrative only and not a recommendation to buy, hold, or sell any security.